Okay, well, in the meantime, so this panel is supposed to be about shifting priorities in a changing environment, talking about the new normal and, you know, what investors are looking for here. So happy to open it up to questions. You know, I think this should be what you guys want to make of it. So hopefully I can get on video soon, but would love to hear what's on your minds.
Maybe it makes sense to go around and just introduce everybody.
Yeah, that sounds great. Alex, you want to kick it off?
Sure. I'm Alex. I'm the co-founder and CEO of a startup called Upstream, sort of building like a Discord Slack for professional communities. And I'm based in New York, and I'm hiding from my kids right now.
That's great. Joe, you want to go next?
Sure. I'm Joe Phaedra. I am a founder and CEO of a company called Infinite Objects. We are a hardware company building a new way to monetize video content. Our product is a video print. It's a display that is permanently flashed with one piece of video up to 24 hours long. It's a new way to value, collect, buy, and own video moving image content in the physical world, outside of your phone, outside of your browser. We launched last year. We raised a pre-seed last June. And, you know, according to like the way we had planned out that pre-seed, we were going to fundraise again starting this month. We've got about 6 months runway in the bank. And so it's an interesting moment that, like, you know, our plan was to start going out now, but obviously things have been slowed down. And yeah, so we're figuring out how to navigate this time, but we've got a nice story, and all of our current investors are really happy with the story. And I'm not like crazy concerned, but it is obviously very, you know, tenuous in terms of how
Totally. Seems like this conversation will be super relevant to what you guys are going through.
Great. Looking forward to it.
Matt, do you want to go next?
Sure. Hey, my name's Matt. I'm one of the co-founders of a company here in New York called Clay, which is sort of a modern day Rolodex, or we don't like to use the word, but personal CRM.
Great. And where are you guys in the fundraising journey?
So we raised a seed round a little over in Q1 of last year, so around April, and sort of just been heads down building product, and have a private beta going right now.
Awesome. Scott, want to go next?
Sure. Hi, everyone. I'm Scott Lichtenstein. I'm co-founder and CEO of Brasier. We're an AI co-pilot for sales managers. We essentially help them to understand what their team is doing and how it's affecting sales outcomes. We had raised a pre-seed round at the end of last year, and we're hoping to go out again for another round in the fall. So not as worried as some of the other folks, perhaps, but definitely concerned about where we are in the macroeconomic environment.
Great. Hillary?
Hi there, I'm Hillary Mason. I actually just started a company in mid-February. So we haven't launched anything yet, but it's in AI and narrative generation, which is something I've been working on for a long time. Yeah, and I'm in New York as well. So no money raised yet, but we're thinking about it.
Gotcha. Okay. Caitlin?
Hi, I'm Caitlin Kelly. I'm a co-founder of a company called Vivid. It's an earned media planning tool. So communications teams can use our SaaS platform to manage PR and media relations, events and conferences, etc. We're pre-seed. We intended to raise around now, but obviously things have been pushed back a bit. So we've bootstrapped the product to date. We're revenue generating, so we have a bit of cash to keep us going. So we're just sort of playing it by ear and sort of taking it day by day, as everybody sort of, you know, alluded to previously. Yeah, and we're based in New York.
Okay, great. I think Zach, you haven't gone yet.
No, so I'm Zach. I'm one of the co-founders of Grow Squares. We make a smart gardening product that utilizes advanced remote sensing and data science to have a really good understanding of someone's microenvironment. And then we provide a garden that's specifically tailored for that particular space. We raised our pre-seed last year, had a seed round going that we thought was closed until about a month ago, where that handshake deal sort of fell apart because the strategic that we had that was leading the round kind of dipped out because of circumstances beyond our control. But excited about the conversation today.
Awesome. And then Emily, are you with us?
Hi, yes. Yeah, I'm a student at Penn State University, so I just wanted to join in.
Oh, fantastic.
Yes.
Great. Awesome. Well, thanks to all of you for going around and providing intros. I'm Ashley. I'm a partner on the team at Lightspeed. So I sit on the consumer side of the house. So that's 6 of us. And then the enterprise side is a little bit bigger. It's about 20 partners. So all in all, 26-ish partners on the team. We're one of the bigger funds in the Valley. It's we actually just announced yesterday $4 billion in new funds. And we invest across, all different stages. So early stage, stage. And yeah, happy to provide perspectives on what's going on. We've been, actively working with our portfolio companies to figure out, how to project and how to model for the next, I'd call it 18 to 24 months. And, I think no one really has the answers right now, but happy to share what I've been seeing from my experience. And it looks like Michael has joined us again. Hey, Michael.
Yeah, sorry about that, guys. I got dropped. It took a second to get back into the breakout room. So I guess we're still doing intros. Is that right?
Yeah, we just went around and then I gave a brief intro, so would love for you to give an intro as well, and we can jump into their questions.
You bet. So Michael Carney, I'm a partner at Upfront Ventures. We're based in LA. We're a early stage fund, $400 million kind of seed and Series A focused fund with a growth vehicle alongside that'll invest, both in follow-ons to our portfolio as well as a handful of new growth deals a year, kind of outside of that, kind of B through D stage maybe. And so, yeah, we're based in LA, but some people kind of conflate us with being a regional firm. We invest nationally. We have portfolio companies in New York and Bay Area and Atlanta and all the other places you'd expect. And I spend most of my time on the kind of fintech, real estate, kind of SaaS sides of the world, with the occasional kind of e-commerce or consumer business thrown in there for good measure.
Great.
Yeah.
So what sorts of topics are on your minds? What would be most helpful to chat about?
One topic that jumps to mind is just, we sort of touched on this in the last session, but relationship building. How do you like entrepreneurs to approach you now and start those conversations? What's appropriate in this environment?
Great. Super relevant. What other topics?
I'm sort of keen to hear your thoughts about your investment profile. Obviously, it's a super risky time, but with risk comes big reward. So are you sort of honing in and narrowing the types of companies that you're investing in, or are you more flexible and open-minded in terms of what that profile looks like now, given the state of the world?
Yeah. Great.
I'd love to hear what your process is now, considering you probably can't meet people because we meet them for the first time. So if you can't meet them face to face, what are you doing differently, and is that extending the time that you take to make a decision, or not?
Yeah, totally. Great question.
For me, both of the relationship building and the process question, I think, are kind of number one for me. Number two, I'm curious if you have observed any change in how you, approach valuations these days. I know obviously we're expected to always be increasing, but what kind of, approach should a founder have now that we're in this moment? And, I've heard advice from different VCs ranging from, don't change, what you think you've built and how much it's worth and how much it should be worth. Other ones saying you should feel really flexible in even taking the same terms as your last round, because that might be your only opportunity. Would love to hear kind of your thoughts on what the current environment has affected and how that's affected that process.
Great.
Yeah, I'm curious if there's been a commiserate shift in any of the KPIs you guys measure, where now perhaps you're looking for a little bit more early sales, or just different types of metrics as the world has changed.
Awesome. Anything else, you guys? Okay, so I heard relationship building, so how to build a relationship in this time, which I think sort of goes along with the question around process. How does our process look different? And then the others were around investment profile. So what are we looking for? And I think sort of KPIs is part and parcel of that. So can chat about that together, and then valuations and thinking through the opportunity. Does that capture it pretty well? Anything else? Good?
That's good, yeah.
Okay, awesome. Maybe we start with relationship building and how the process has changed. Michael, do you want to kick it off?
Yeah, I would say I'm happy to kind of give you a lens into what we've done over the last 4 weeks. I would kind of go back to some of the comments we heard in the last session, which is I think it's still changing. And so the next 4 weeks may look different than the prior 4 weeks. And we're, I would say, figuring it out and trying to, establish our best practices or what works for us and our entrepreneurs in this environment. But we certainly, obviously, kind of been open for business. We actually issued our first term sheet on a deal that we met or engaged with for the first time in kind of post shelter from home environment. And so the first contact was over Zoom. All the kind of diligence interactions thereafter was over Zoom. The partner meeting presentation was over Zoom. That was entirely new for us. So it is possible. To reiterate one of the comments I heard earlier, it was a relatively early stage, relatively small check for us. It wasn't, a very large, very kind of mature business that we had to kind of get a higher level of conviction on. And so I think that is probably pretty good advice. In terms of just process and how we thought about building these relationships and kind of getting comfort, I would say we're probably having more touch points, more interactions over the cycle from first contact to, partner meeting or term sheet than we otherwise would. I think the good news is we've actually been able to do it. It feels like in a relatively similar time frame. People are, because there's, just the logistics of travel and getting together with people is a little more, flexible. I've been able to have, multiple calls or multiple meetings per day with the same group or with, one founding group with multiple partners and so forth. And so we've been able to move at a relatively similar pace, at least kind of getting to know teams and kind of getting to know their businesses. But there's been more touch points just, again, to try and develop that level of kind of confidence and relationship context. And then also we've been doing, I would say, more kind of referencing and back channeling to try to triangulate some of the signals we would have gathered and taken from intuition in person. So, talking to other kind of former coworkers and managers, people who have either invested in their business or worked alongside them in some capacity in a previous life. Again, just trying to grab signals and data that we might have otherwise not felt the need for, or felt like we could kind of come to the same conclusion through our one-on-one interactions with the company. Again, in the particular case of the term sheet we did, I'd say we probably did more referencing and more back channeling in that context to get that level of comfort. And then, I think on some level, it's kind of a gut feel. There are certain deals, even in a normal environment, where it's so obvious, or the kind of conviction or chemistry amongst the team and around the deal is so strong that it's a pretty easy yes. And I think, there are deals that are marginal and you have to kind of convince yourself that through extra work and through extra diligence that you're excited about something. And I think just, on that continuum or that spectrum, the deals where it's a more natural kind of right up the fairway fit for you as an investor or yourselves as a firm are unfortunately or fortunately going to be the ones that are easy to get done in this immediate moment. And I wouldn't say I'm an optimist in the sense the world's going to get back to normal, but I think the world's going to get more predictable or known in the next 4 to 6 weeks. We're at least going to know or have a stronger point of view on what the next few quarters hold. And in that environment, I think we'll all kind of settle into what the new normal is and what we can expect as far as process and playbook and stuff. And right now it just feels like the world changes day by day or hour by hour. And so that level of extreme uncertainty makes it a little harder to know. Again, which deals we should be spending time on, which, firms, maybe entrepreneurs should be spending time with, what is a fair or good price for a deal today. And so in the uncertainty, I think it's a little harder, but it feels like we're getting to a point now where at least we'll have enough data to know or have a strong point of view on what the kind of medium term looks like. And that'll help, I think, everybody.
Yeah. I'd say it's
Ashley,
been a similar... Yeah,
I was
no,
just gonna say, does
exactly.
that align with what?
Yes, for sure, for sure. It's been a pretty similar motion at Lightspeed. So for the first couple weeks of the lockdown and things changing, we were more so focused on the existing portfolio and doing a pretty deep review there to understand like what's their cash position, what level of risk are they each holding, and how is COVID going to impact, you know, folks who are in our existing portfolio. And in the past few weeks, I'd say, you know, new meetings, pitch meetings have picked up a bit. We actually haven't yet issued any term sheets to groups that we hadn't met already in person. So we've done deals in the past month, but no one that has come through the process in an entirely digital format. So, you know, I guess we'll cross that bridge when we get to it, but, you know, totally agree with Michael in that more touch points, a lot more references, you know, I think probably feeling comfortable with folks who are more kind of in the immediate network. There's a company I'm diligencing now where the CEO I've met 3 times remotely. And her CMO is someone who I went to school with. And so that like gives me a little bit of comfort, but it's still, you know, still a hump to get over. But I'd say the process is the same. So at Lightspeed, typically one partner will meet with the founding team, and then they bring together a bigger group of partners, usually 2 to 3, you know, including the folks on the team who sort of know more about the subject area. And then, you know, after those 2 meetings, if we decide that we're interested, we'll then bring you into the full partnership meeting. And so that process is the same, hasn't changed. The only difference is that it's, you know, obviously done remotely. The one thing that has changed a bit, I suppose, is, you know, typically we'll have dinner with you or invite you over to our house to get to know you, or, you know, meet up and have a drink together. And that's just not possible. And so getting to know people on a personal level, I think is going to be more difficult. So, you know, we'll have to figure out how to solve that. But I don't think we know yet. And then on the relationship building question, I actually think, you know, if you're not actively raising, now is the perfect time to start to build relationships with VCs, because there are fewer deals coming in. And, you know, I'm not running around from happy hour to happy hour in the evening. I actually just have like a lot more time on my hands than I would otherwise have. And so I've been much more open to taking chats with folks who aren't immediately raising, but, you know, where I want to get to know them and they want to get to know me for a potential raise in the future. So I wouldn't be shy about reaching out now. You know, some folks may have a lot of work to do with their portfolio, other folks may not, but I do think now is a pretty good time to reach out. Any follow-up questions on relationship building or process?
Yeah, I would just echo the second point. I didn't really touch on that, but I think, again, if you're, you know, unfortunately, there's plenty of people in this position, but if you're running out of cash in 3 weeks and you're trying to spin up a new process, it's going to be a really tough sell, just because of the uncertainty and the level of conviction people need to develop to build a relationship. But if you have, you know, even 4 to 6 months of cash and you're, you know, obviously not in a great spot, but you have the time and the latitude to build that relationship over a period of time, I think it's actually a really good time. You know, I personally taken plenty of first introductions in that kind of context where it's, you know, we were going to raise money in Q1 of 2021. We're probably going to move that forward, and maybe in, you know, August or September we'll be really in market, but we're starting to build those relationships now. I think that's a natural conversation. And again, it feels like I can take more meetings of any kind in a day because I'm not traveling geographically between them. And so there's plenty of slots where I can take a 30-minute or an hour kind of Zoom call with somebody for our first meeting, and I'm happy to do that. So I would assume that's pretty standard across the industry. I mean, obviously, and we were similar to Lightspeed, where we spent at least the first 2 weeks of the month and you know, still continue to, but really heavily focused internally on the portfolio. And it feels like everyone now has largely at least gotten a lay of the land there and are now kind of picking their head up and getting back to normal business. And so where it might have been harder a week or 2 ago to get those meetings, I think if you're scheduling now for the back half of April or early May, I think that's pretty reasonable. And then the normal rules apply. You know, the better, again, kind of given what we talked about establishing kind of relationships in this environment, if you can get a warm intro and you can help someone triangulate the confidence that you're, you know, somebody that we should all want to work with. I think, intros and triangulating networking into these first meetings is even more important in this environment. I think it's even harder to do a kind of cold intro, digital only relationship building process. And so again, just be thoughtful about how you get in front of people and use your network and your Rolodex to your advantage.
Absolutely. All great points. So maybe we can shift now. I think we have about 15 minutes left to the questions around investment profile. So what types of companies we're looking for in this new environment? What are the KPIs, early sales numbers or metrics that we're looking for? And then maybe we can transition that into the question around valuation and what approach founders should take in thinking about valuation. So on investment profile, I'd say here, at least for me, I'm looking at a lot of e-commerce businesses, a lot of consumer health businesses, marketplace businesses. So I'm focused a little bit more on what are the fundamentals of the business? How is this going to weather the current environment? So, sort of pulling back on things with any kind of IRL component, with any sort of, like retail stores, or I'm looking at clinics, if they have like a real estate footprint. I think that is something that's a little bit more concerning for me than it was in the past, just given that it's unclear what the timeline is going to be for those reopening. Is it 6 months, 12 months, 18, 24? Like no one knows. So leaning back on that, leaning more into things that are, online or related to opportunities that this new environment is presenting. So, like last mile delivery, telehealth, sort of in-home remote delivery type services. And like thinking about too, how is this changing consumer behavior and what are the opportunities there? As far as KPIs go, I think just kind of recognizing what is reasonable given the current environment. So obviously, if your graph is up and to the right and then there's a dip and then it's, sort of climbing back up, like we get that. And I think, recognize that this is sort of a crazy time. I think more important than KPIs, I'd be focusing on the founder and the team and what they've done to pivot or to address the current opportunity. So I think it's important to have a founder who reacts quickly. And so, if that means making cuts, that means making cuts. But like I want to see that the founder recognized that that's what needed to happen and did it in a pretty fast and targeted way. Or, if that means they need more cash conservation, I want to see an updated plan that, shows what they're going to do, and maybe even some scenario analysis around if the downturn lasts, this long, that long, or, whatever. So yeah, I think that's sort of my answer on investment profile and KPIs. Michael, what do you think on that?
Yeah, I think all that makes sense. I guess the other thing I would point to is, what I've been thinking about and we've been talking about internally is kind of the difference between kind of need to have and must have products and services. And so kind of thinking about this from the customer point of view, whether the customer is a consumer or an enterprise or a business, everybody is, I think, reevaluating, where they're spending money and time in this environment. And again, none of us know what the future holds, but I think, everyone probably believes the future is going to be in some ways different than it was in the past. And so people will be kind of reestablishing norms around time and money and resource allocation. And so just understanding kind of, we're looking at new businesses where the product or service fits in that continuum of how necessary and how high utility it is versus how much it's a luxury or a nice to have. And then, kind of a similar vein, looking at who the target customer is and how healthy we expect that customer to be over the next, several quarters or years. And so again, if you're a business that's, let's say hypothetically, we're selling into the travel industry, it might be, a really hard conversation these days, because I think that may be an industry that takes a much longer time to rebound and get healthy, right? If you're selling into, let's say brick and mortar restaurants, like it might be a painful 2 quarters, but I think we all believe that that's a an industry that will rebound in some form or fashion. The business might look different tomorrow, and so you might need to have a different thesis on what that business looks like and how you change your offering for the new environment. But I think most people would be receptive to a business selling to that cohort. I think the other thing, to the point about KPIs and graphs, I would agree that if your trends have changed over the last 6 weeks, I think we'd be pretty understanding about that. I think what we are starting to try and dig into is what does that lead us to believe or imply about what the next few quarters are going to be. So again, if you had a little blip and the things are kind of going back up into the right, and we've kind of gone through this customer analysis and we believe your target market's pretty healthy, then, great, we're excited to keep talking. If it continues to go down into the right and it implies that your customers either, again, don't view you as necessary and you're a nice to have and they've kind of reallocated their resources, that's one, or your target industry, consumer, B2B, is not bouncing back, that's a slightly different conversation. So I would say there's no firm and fast kind of KPI rules. Like, it's not, you have to be $1 million ARR to raise a Series A, but I think knowing how to tell the story around your data and what it says about your industry and your kind of go-to-market strategy and the viability of your product is really important, maybe more important today than ever. And I think, I as an investor, we as a firm, kind of, I'd say most of our peers in the industry are probably taking a second and third look at that kind of narrative and trying to sanity check, do I believe in this version of the future? And maybe trying to be more quantitative about it than, believing it on just pure instinct. So I think, those are the things we've been talking a lot about, again, with our existing portfolio as much as with new deals. What is the data telling us about how the customers view this product, and do we need to do something different? What does that mean the future might look like?
Yeah, I think you guys are all in a pretty good spot because you're more early stage, you're pre-seed and seed. And I do think of all the companies that are going to experience hardships raising, it's going to be a lot harder at the growth stage. And so you have an opportunity to pivot the business model or, grow in a more lean way and plan to grow in a more lean way now than some of the later stage companies. So that is a bit of a silver lining.
There's a cliche that says nothing ruins a good story like data. So if you don't have any revenue data, you can tell your own story, which is honestly is true. It might take you longer to go to market. You might have a different strategy, but you can kind of recalibrate in real time.
Yeah, absolutely. Michael, I'm curious, what are your thoughts on the valuation question?
Yeah, I mean, it's a hard question in the sense that I don't know that we've really, as an industry, settled on what the new normal looks like. If this is a truly temporary kind of aberration, or if this is more of a kind of a lasting change in the environment, kind of in the macroeconomic environment. And so, in that sense, I don't know what valuations are going to look like, let's say, in 60 or 90 days. I think right now there's a ton of uncertainty. It feels like, there's a pretty big gap between, at least in some of the conversations I've had, with what entrepreneurs, think their business should be worth or was worth 6 weeks ago, and what an entrepreneur an investor might be willing to price it at today. And so, the advice I've even been giving my existing portfolio companies, regardless of stage, is if you can wait, 6 or 8 weeks even to have that conversation, I think you're going to be better off. Not necessarily the valuation will get better over that time, but that the data and the confidence level of everybody around the table will get better. So I think now is just a really hard time to have kind of valuation questions or conversations. At the really early stage, like at the kind of pre-revenue stage, I think it's valuations are almost always driven more by kind of round size and ownership targets than by some kind of formula around a multiple of a financial metric. And so in that sense, I don't think they're going to change inordinately. But I think it's more a matter of, are people going to be comfortable enough to do a deal, period, let alone how they're going to price it. But I would imagine, I find it hard to believe that valuations won't come down a little bit over the next few quarters. But at least at the stage you guys, all your businesses are at, I don't think it's going to be outrageous. I think because, again, those deals are much more kind of check size and ownership driven often. And so maybe the round size is compressed. Maybe the Series A goes from 12 to 6 or 12 to 8. And that, again, usually is reflective more of the business opportunity, the business plan. So like, how much money do you really need to get to 24 months and get to, a material next milestone? And so if the business plan changes, the round sizes and structures might change. But again, all that will be dictated by what, we as an industry believe the future looks like. And I don't think we know today.
Yeah, absolutely. Super similar at Lightspeed. You know, I think in the first couple of weeks of the shutdown, there were a lot of hangover valuations from what the world looked like in the previous month and when the founders went out to start raising. And some of those deals got done at those valuations and some didn't. Some of the valuations, you know, came down. But yeah, you know, we haven't had any deals at investment committee for the past couple weeks. And I think that is emblematic of people just sort of waiting it out and wanting to see where the valuations are going to settle and what's a fair deal. You know, I think that's advantageous both for the investors and for entrepreneurs to really understand where the market's at. And to Michael's point, we just, you know, don't know where that is. Interestingly, I looked at a business from it was a business that had seen a bump from COVID. So they were actually doing like, you know, way past their plan. And so that was a challenging one because, you know, it was sort of like, okay, well, do we value this business based on what they're seeing now? And, you know, how much do we believe that bump is going to continue? And where we sort of landed was we really wouldn't be able to value it much above what they were doing pre-COVID, just because it's so unclear to us, like, you know, how are consumer behaviors going to change, and then how are they going to stick, and how long is that stickiness going to last? So yeah, I think that's just sort of emblematic of like a lot of uncertainty right now about what this all means. We have 5 minutes left, so if there's other questions or things you guys want to go deeper on, would love to hear.
And I have a question that maybe as much for the entrepreneurs in the room.
Yeah.
Like we've made a decision to avoid hiring and just sort of take things slow for the next few months. And I'm curious how, I mean, at the early stage, we have that flexibility. I'm curious how many other people are making those decisions versus still trying to move as quickly as possible. And just for the investors, sort of what you're seeing in the last few weeks. And then for the folks who are actually making these decisions, curious for your perspectives.
I could share. We're 4 people, and you know, our expenses aren't that crazy, so it's like 40-50K a month. And we're not doing any revenue right now, but we're gonna prioritize some revenue generating products. Yeah, we're keeping the team intact. It's me, my co-founder, does all the engineering. Our first hire was a front-end engineer, designer, and then product person. So everyone's technical except me. So we're just keeping the team intact and just cutting. I mean, we don't have to pay an office anymore because luckily we did like a 3-month trial thing somewhere, and it like just ended, so it was like perfect. We're just keeping all of our expenses down, and we don't really need anyone else right now to get to where we need to be.
From my side, oh, sorry, go ahead.
No, go for it, Joe. Would love to hear.
Yeah, no, I mean, we are a 7-person team, and we had one contractor who was very part-time, I did, you know, terminate that contract maybe a month early. But they totally understood, and it was a very part-time thing. Other than that, you know, like Alex just said, it's important to us to like be a family at this time. I think also like emotionally and psychologically, like to keep the team in a productive state when now everyone is working remotely. For me as like the leader, as a founder here, I wanted everyone to feel very like, okay, we're in this together. Yeah, it's challenging. Luckily, our revenue has not been hit. Our numbers have not. We launched just 4 months ago, so our numbers weren't insane anyway. But we haven't taken a hit. We've actually gone up, and that's been nice. Our product is it's not necessarily a very need to have product. It's more of something that can bring joy to you or to someone who you can't be with in a physical way as well. And so I think our story is nice in that sense. But yeah, no, we haven't let anyone go. I have many founder friends who have said, you know, like a team of 10 recently, they cut 20% of salary across the board. And that was, you know, in solidarity. It was like everyone, all of the leadership, as well as everyone working is taking a 20% cut for the next 3 months. And they weren't upset about it. They were happy to do it because, you know, again, it's showing a lot of devotion and excitement about what they're building and why it's meaningful. So so yeah, that's kind of what I've heard and what we're doing.
Awesome. All right, it looks like we're getting booted out of the room in 8 seconds. So it was great to meet all of you, and thanks so much for the participation.
Thank you. Thanks so much.
Bye, guys.